Defying expectations, the world's biggest oil producers vow to keep up production despite a major drop in prices. Is it all part of a long-term plan to maintain their domination of the market, and will it work? This is Inside Story. Hello and welcome to the show. I'm Sami Zaidan. Well, a lot of hype has been created by the dramatic fall in oil prices. In June, the price of Brent crude was up around $115 a barrel. Now it's fallen by almost half, hovering around $60 a barrel. The winners and losers of the price crash seem, on the face of it, fairly obvious. Big oil consumers like the United States and Japan are benefiting from the lowest prices in years. But the countries that rely on oil revenues to balance their books are facing a major crisis. And as you can see, countries like Libya, Iran and Venezuela all need much higher oil prices to balance their budgets. Richer OPEC countries are better prepared, though. But even Saudi Arabia will start to feel the pinch over enough time. And as the prices fell, many analysts waited to see how OPEC, the world's largest oil cartel, would react. Well, the obvious move would have been to cut production and help push up the prices. But when OPEC members actually met in November, they chose to do nothing. That's now being seen as part of a long-term strategy by OPEC's dominant member Saudi Arabia to protect its share of the market. New producers like US fracking firms have flooded the oil market in recent years and contributed to dragging the price down. But their production costs are high. Many believe Saudi Arabia is banking on lower prices, pushing these new producers out of the market. Well, that strategy may already be paying off, but with devastating effects on some non-OPEC oil producers. Just a few months ago, North Sea oil reserves were the big prize at stake in Scotland's referendum to split from the UK. But with oil prices at or below $60 a barrel, analysts say none of the planned projects in the North Sea will turn a profit. Oil companies are having to make big cuts, not just in Scotland. Goldman Sachs predicts $930 billion worth of projects worldwide may fail to get the go-ahead next year. Let's bring in our guests to the discussion now. Joining us in London is Manouchehr Takin, an independent oil and energy consultant. And on Skype from Dubai, Saadallah Al-Fathi, former head of the Energy Studies Department at the OPEC Secretariat in Vienna. Welcome to both of you. If we could start with Mr. Saadallah, you know OPEC fairly well, I think it's fair to say. Why isn't OPEC cutting production? What's the strategy here?
Well, the problem is that some of its members believe that they should defend their market share. As you know, in the last 3-4 years, OPEC production has been somewhat stagnant or even slightly falling. And for this reason, the organization is worried about losing market share.
Let's be clear here. Sorry for interrupting, Mr. Saadallah, but let's be clear here. When you say they want to maintain their market share, is what you're saying is they don't want to see other producers, perhaps from the US, companies engaged in fracking, being able to increase their production if OPEC decreases its production?
That's correct. That is correct. And that is how the last conference in Vienna played out. Apparently, Saudi Arabia was able to convince other members to go along bitterly, at least for a while, to see if this kind of policy will work, whether shale oil will be stopped or reduced, or not only shale oil, in fact, all high-cost oil is affecting the market share of OPEC. We have known this for years, but now apparently it came to a head.
So basically what you're saying is OPEC is hoping the low prices are going to snuff out some of those newcomers to the market from fracking in the US and Canada and so on.
Well, at least Saudi Arabia thinks so.
All right, Mr. Manouchehr Takin, can it work?
Whether the policy would work or not, really, it is like who would wink first. you see, with the high price of oil being 110, and it was about $140 before that, at that level, of course, it encourages many entrepreneurs and others to go into oil industry. The established oil companies to go to high-cost areas, risky areas. So over the since 2008 or 9, the last 5-6 years, we have had investment in different parts of the world, which is now gradually coming to fruition, and we have oil being produced and exported from many countries. The case of fracking that you mentioned is one in which the technology managed to develop and bring oil out using the same fracking and horizontal well which existed before, but new improvements, innovative techniques made it to be successful. And so we have, as one case, and also the offshore Brazil, offshore West Africa, and also onshore and offshore East Africa. There are so many parts of the world that the high price provided cash, and established companies with cash flow, big ones, independents and entrepreneurs went in, invested,
but we don't
used
have
new technology.
Forgive me for interrupting you as well.
They have competition.
We don't have high prices anymore, do we? It's no longer at 115. Yes. I read one study which was saying that new producers, fracking producers, need the oil price to stay above $110 a barrel to make a profit. How are these guys still in business then, when we're looking at $60 a barrel?
Well, the figure of 110 as a cost is a very general number. You see, each company which does fracking has its own proprietary techniques, and the costs per barrel on a theoretical basis might vary from anything from $40, $50, or maybe to 110. So there's a range. And some of the marginal high-cost ones may require that money, that oil price, in order to make them successful. But so others might still be profitable at, say, $60 a barrel. But one important thing, it is not the theoretical cost per barrel. The important thing is that many of these entrepreneurs and fracking companies are smaller companies that have taken loan, they have had issued shares, and they have a high leverage. They have to pay interest, and they have to pay back loans. And it is not the cost. It could be that even at $70, $60 a barrel, they could still make a profit, maybe $10 a barrel. But they have to pay back their debts. So all these companies are in serious financial problem.
Okay.
Even Exxons and Chevrons and so on are. But of course, they have a balance sheet, a strong balance sheet, and they can continue. But many of them are beginning or have announced that they will reduce their investment, capital investment in general, conventional and non-conventional oil exploration and production in 2015 and the years following. So it is that low investment, sense of crisis with the actual producers, unemployment, and sense of recession or a real recession in the services sector, those who manufacture bits and platforms and so on. It is that crisis in that part of the world, which is, it could be United States, Texas, here, North Dakota, and Scotland and others, you see.
All right, we'll get into Scotland and others in a second, but clearly the picture which you're painting here for us is that fracking companies need to take into consideration a lot of things when they're pricing or looking at their price threshold. But you did give us a range there, which was nice, Manu Sheher, of $40 to $110 a barrel that fracking companies can still survive at. It's a very wide range, but I want to come to Mr. Saadallah and ask the question, from your understanding, you've worked, as I said, with OPEC, what is the price threshold for OPEC countries? Because we've got quite a range of countries. How low, in other words, a price can OPEC watch the price go down to and still sit back and say, we can survive this one?
Well, I think it's already very low for all of them put together. And definitely at today's prices, all of them will have to finance their budget not only from the sale of oil, but either from their reserves or by borrowing money in the market, or by cutting on expenditure, especially in investment and on social services, etc., which with all the problems that this will bring with it into the oil-producing countries.
For sure, but there is a bit of variety, isn't there? If you look at the cash books of, let's say, Venezuela versus Saudi Arabia. Maybe we should focus on Saudi Arabia, since it seems to be the driver of OPEC's decision and thinking at this point. How low can Saudi Arabia watch the oil price go to, and for how long can it watch a low oil price, do you think?
Well, if we believe the analysts who are saying that Saudi Arabia needs $104 a barrel to balance its budget, then you can imagine that the price of oil now, the average price for Saudi crude is now almost half of that. So in order for Saudi Arabia to balance its budget, it will have to draw almost $50 from its financial reserves on every barrel that it produces and puts in the market. And this, in my view, is a very heavy undertaking, in spite of the fact that Saudi Arabia has almost $700 billion in reserves. If that is the case with Saudi Arabia, all the others are in fact in a much more serious situation.
Fascinating stuff, because what we're hearing from both of our guests here is that basically there's a wide range when it comes to the price threshold for both OPEC and for fracking companies, and that it's going to be costly. So I guess the question I'd like to get from both of you, let me start with Saadullah, is who do you think is going to blink first then?
Well, we tried this policy in 1986, and we blinked first, the oil producers. We tried it for only something like 6-7 months, and then we decided to go back on fixed prices and allocating quotas for member countries.
Do you think it'll happen again? Do you think OPEC will be the first to blink again?
Well, look, I'm not saying, I'm only telling you what happened in the past. Now, the problem is that...
Oh, come on, we want you to go look into your crystal ball a little bit for us, and I want to see what Manu Shahar thinks about that.
Even if OPEC blinks now and do something about it, the problem with oil prices is they have a kind of momentum. You see, in that 1986 experiment, it took 20 years before oil prices recovered. And now, if it's going to take that long, it's going to be a disaster on everybody.
All right, let's, Manu Shahar, who do you think is going to blink first?
Well, I think it is a political issue. You see, in 1986, the Vice President George Bush visited Saudi Arabia at audience with the king. Officially, afterwards, in his press conference, said that the United States is for free market, no interference in the oil market. But in fact, this is what he did, asking the king. And the OPEC ministers, within a few weeks or few months, got together and decided to have the price of 18 as a target, and so lower their quota. As Saadullah said, they blinked first. But the blinking was really following this international geopolitical coordination or lobbying and so on.
Now it's kind of different, the situation, isn't it?
Yes, I'm telling you, in 1986, 1998, 99, oil price again fell. And again, there was lobbying, this time quite openly, by the United States Secretary of Energy, saying that Bill Richardson going around telephoning and visiting. So it is really the point of pressure. I mentioned when I said I introduced this phrase of who would blink first, that in the United States, in Scotland and so on, you mentioned it at the introduction. It is the environment of crisis, unemployment, people being laid off, and lack of investment and so on. It's a short-term effect, and depends on how they are putting pressure on their senators and members of parliament and the governments to try and coordinate with OPEC. OPEC, on the OPEC side as well, when they say we want to have these non-OPEC countries to come and join, it is a very high, unreasonable expectation if you look at it practically. Of course, we have been in it with Saadullah ourselves on the OPEC side. You see the producers who are coming on the stream and have caused the supply of whether fracking or what other, they are not government, they are not national oil companies. They are individuals, private companies, entrepreneurs, and so on. So they cannot reduce their production in order to defend the price. At the end, really, it has to be an overall game. When it gets to the stage I think in this case there is a possibility on probably on the consumer side, but this is really speculation, that it may be the financial crisis so much that they would try to put pressure. But when they put pressure, it is all of them, both OPEC and others, who agreed to do something. Again, to have our non-OPEC countries to join in, it is a bit theoretical. But the statements, like in 1986, Mrs. Brundtland, the Norwegian minister, made a statement which was useful. She said that from 1987 onwards, Norway would reduce investment in oil production and platforms offshore Norway, and therefore that statement, although the actual reduction of production would be another year ahead, but that statement made an impact. So it is both psychological, political statement as well as actual level of investment, which would take a few months in order to come down.
All right, Saadallah, how long do you think that this game can go on?
Well, to be honest with you, I know the story that Manu Shahar is telling, but I am, doubtful if non-OPEC producer will come along and say, yes, okay, we will do this, we will do that. Again, 1986 is a good example, and the following years. And OPEC couldn't very much get some real support for prices from non-OPEC producers because they have other issues on their minds. Their political system wouldn't allow them to do that, either their relations with the United States and other NATO countries wouldn't allow them to do that, either they have taken loans from banks and whatever, and they cannot do that. Look, even a minister in Russia, I forgot his name, recently said that we are not going to reduce production, even if prices go down, because if we reduce production, others will increase their production and take our share. So
that does seem to be the overriding concern for conventional oil producers, doesn't it? If I can come to Manu Shahar again and say, a few years ago, few people saw fracking production rising to this level of challenge for conventional oil production. Could we be making the same mistake again in writing off the frackers as an industry that's too new, too heavily leveraged, that it can be snuffed out? I mean, isn't it possible that fracking companies are already investing in R&D to come up with an even more efficient game plan to deal with low prices? What do you think, Manu Shahar?
I definitely agree with the second view, and in fact that is the experience of the industry from 1980s and again 1998, 1999, that the low price causes short-term crisis, unemployment and even political unrest and so on. But the industry sooner or later manages. In the 1980s, in the North Sea, there was a major commission. All the industry got together and the government provided them grants and so on. And as you said, with research and development, they managed to lower the cost of production in the North Sea and they made them competitive. And the same in the late 1980s. So up to about 2003 and 4, world oil price for about 2 decades had been about $20 to $30, $25. We had a unique case in the mid-2000s that because of lack of investment or delay investment, we had a shortage of supply. You see, the price of oil is really managed, it is common sense, by the flow of supply in the market and the flow of demand taking oil out of the market. Because of the lack of investment following 1998 and 1999 oil price collapse, which came to less than $10 a barrel, companies did not invest. They reduced their investments. As Saadullah said, they are now, and I said, they are reducing investment for the coming years. And into the late 90s, they didn't invest. They reduced investment in 2000, 2001, 2002. All the oil companies' investment around the world, company operations, CapEx, the capital expenditures were low. And so when demand by the Chinese rose in the mid-2000s, there was not enough oil to meet it. And, but later on, as has happened, will happen now, if the price goes down, the cycle will be repeated. So the industry, frackers and others, can manage to make their operations more efficient and get their break-even prices lower and
Okay.
to manage with the low price. But that is a repetition. That is what I think the oil ministers,
Okay,
Saudi Arabian ministers, the
I
others,
like where you're
they say
going.
if they keep the price high, they will create competitors for OPEC.
All right. So,
there has to
on
be
that point, let me jump in, Manu Shahar. On that point, Mr. Saadallah, fracking technology has already changed the world in a sense. The US now is the world's largest oil producer. Not exporter, of course, but the largest oil producer. It's not as reliant on Middle Eastern oil as it would be without fracking technology. Do you see perhaps a motive or an incentive for state support to some of these private companies that are engaging in fracking to keep them alive for strategic reasons? Is that a concern, do you think, to OPEC countries?
Well, I don't think this will happen. The free market principles are a sort of religion for the capitalist countries, and I don't think they will lend support to private investors to do so. But I want to say one thing, that you see the fracking companies already have a system in place for production. Now, what they need is more drilling, continuously more drilling in order to sustain that production. Now, if oil prices go down so low as they are now, or even lower, then all they have to do is stop production. As soon as the price of oil goes up again, they just go and drill. And
so it's never going to end. The problem of fracking, so to speak, for OPEC is never going to end.
Well, no, it will end. It will end.
How will it end?
It will end because everybody expects that shale oil will be coming down in a few years' time. Let's say 2022. There will be a decline in the production of shale oil. So really, I think OPEC should have played it differently. I mean, I don't want $110 prices. Let us go to $100 prices. Let's go to $90 prices. Let's go to $80 prices. But the way it happened is as if we talked the oil price down to this drastic level. And now it's very difficult to bring it up in the same speed that it went down.
Right, do you agree with that analysis there, Mr. Manu Shahar, that this is going to end anyway for the fracking? OPEC let the prices go down too low.
You see, one cannot, this is the global market, and we are talking about 90 million barrels per day, 80 million barrels per day oil production and distribution around the world. And it is difficult, no one can plan it, even organizations like OPEC or OECD, they cannot plan it. As Saadallah said, it is a free market story. So we have a flow of supply and a flow of demand around the world, and when these two are balanced, the price is almost stable. And when it's high and lower than the other one, the prices would move. So we need the question you're asking is, well, of course, an obvious question, is a logical question, that what is the balance price? What price level would the supply and demand balance each other? And as I said, because supply is inflexible, that when platforms are made, they can keep producing. In the case of fracking, is a bit more flexible. The next well, they would not drill if the price is high. Right. So my guess is that the price will come down probably about, it is now lower, but it reaches the stage that there will be pressure on both sides. Within OPEC, Venezuela, Nigeria put pressure. And outside OPEC, they will put, so there will be a balance. And I think that balance probably would be something like about $70, $80 a barrel.
We'll have to wait and see if that does indeed become the point of balance. We are out of time, so we're going to have to thank our guests, Manu Shahar Takin and Saadallah Al-Fathi. And of course, you can find much more on our website. That's aljazeera.com. You can post your comments at facebook.com/AJ Inside Story or contact us on Twitter. Our handle is @AJ Inside Story. I'm Sami Zaidan. Thanks for watching. For now, it's goodbye.